Good morning, everybody. I hope it's a good morning for you. If you're heavily long, I would imagine not. And it looks like it's going to get worse. So things are following through as we talked about. Not quite exactly, but to different degrees in different sectors. Things are playing out from the analysis about 2 weeks ago. So now we see the S&Ps breaking below the low. And while we look at what's down here, um, dollar wise, S&P's being down. What does it say? Prints are so small, 50 something. Dow down 600, and so on. Whenever we look at a minder with a value, or even percentage wise, you always go to look at the chart and say, well, that's while it's down a lot, we look at the number. Where is it on its way to its destination? And as we can looking at the S&Ps here, it's not even close to its destination, which is somewhere in this area down here. And then we'll see what happens when it gets there. So this initial move, right, that's the initial crack, and there's the stabilization is set up for the possibility. And at this point, it looks like a probability, but we've got to get through this level first of a measured move, which is you got initial move, and then you just project that down, which would put it somewhere down here. I guess in the area of the 200 day, or maybe a little bit lower. But we do have this major support area right here where it says mastertrader.com and a whole number of 3,200. So that's pretty far away for today. But until we get some type of convincing reversal, we'd assume that eventually it'll get down there. We always have two scenarios, and this looks like a sure thing that it's going lower. But we always look at things objectively, especially as day traders. So the turn started here. Down day, range expansion day. So looking at this, could you imagine this turning into a bottoming tail bar today? Hard to do that right now because it just doesn't seem possible. But while we could say it should be going down here, it doesn't mean it has to go down here today. If this did, it would be not anywhere near of a perfect W failure because it's already broken pretty deeply below here. But I just throw it out there just to be objective. Now, intraday, it's fallen a lot. As you can see, it's stabilizing here. Sellers keep coming in. You've got pivots at the top, pivot highs, and you've got pivot lows down at the bottom, which creates a trading range. It's that simple. Pivot highs versus pivot lows, that's a trading range. Now, trading range is one concept. The next concept is to look to the left and say, well, the trading range, is it happening somewhere where things could actually turn around? I look here and I say, well, it's the top of that support level, right? This whole area between here and here is someplace where prices could turn. Now, in a bearish market, and I'm not saying this is a bear market, I'm saying it's a bearish market short term, most of the time prices will go down to major support because that is what is perceived as the highest probability place to be a buyer. So we'll see what happens here, and getting above that level intraday would say, okay, well, I think it could go down here. If it clears here, it's likely to pop back up to some point. And this would then have left this as a new support point for us to have to deal with as intraday traders. It wouldn't necessarily mean anything as far as what's happening here. So right now, this is pointing down. The hourly obviously is pointing down, and it's stabilizing here. The weekly, we covered last week, suggests as it pulls back somewhere in this area here would be historically a turn where you would get some kind of a reversal. So September, worst month of the year. Doesn't always play out that way. It certainly looks like that is underway this year. And then October is the end of the move that starts the Christmas rally. So we'll see how it all unfolds. And, if we're going to really get some ugliness, maybe it comes all the way down to 3,000. I don't know. Anyway, we'll just play it step by step, just like I explained here. Right, this is breaking lower. It's on minor support. Major support is down here. We watch it intraday. A step by step systematic analysis, looking at different levels and then seeing what actually is. So SPX, the money's going to be on the put side, which is where the big risk is, right? Who knows if it's going to stop going down? And we really have a wide area of where it could stop. So it's not getting through any resistance here. So I think the best thing to do is wait here at the open, right? The premiums are going to pop pretty big on the put side. And let's see if this continues to drop at the open. And if it continues to do so, well, then you got to look for some kind of a pattern, even something like this, right? All patterns work in any time frame. So even a pattern like this, right? Where, let's say at the open, this continues to drop and it's heading down somewhere in here. Ideally, maybe it gets to 3,200 and maybe have a little mini crash today. Wouldn't that be fun? And it comes down here, and then you start seeing something like this on the 5-minute chart and it pops above the high. Well, then you go look down here. Maybe the puts below 3,000 are big bucks expiring today. Then you do your put spread. So right now, it's not bouncing. It's holding. We'll see what happens. I'm guessing at the open, the call side probably won't have much of any premium unless you get pretty close to the danger. And so if it keeps dropping, then, you'd have to look at, well, it depends. If it drops way down here, well, then, up above here, since it's created this resistance level, could be a place to go. Right? So let's see how this shapes up, whether, it holds and turns. And so there you have it. Let me just look at spiders here for a second. All right, so down here at 325. 325 opening up here, same thing, down here, actually into that gap fill. So the same story, an area of support. It's opening here. These jiggles that are going on, a spike down to 320, and then stabilization with the right pattern. We can go long futures looking for an intraday move higher. Carlos asked me, why do you start mornings with the S&P 500 E-mini futures? Because I like to. Where would you like me to start? Traders say, ES is the market. And I don't know, unknown caller. I don't know you. Oh, so it's the S&P 500 is widely followed. It's the most liquid traded equity futures contract. The NASDAQ has been a leader, and whether I started with one versus the other doesn't really matter much, Carlos, because we're going to look at them all, and we're going to see what the agreement is between them or lack thereof. So there's no let's say advantage or any way. We're not going to make a better decision if we started with something else because we're looking at everything else. Okay. All right. So NASDAQ, we look to see if there's agreement between markets, and we do. Drop, stabilization here. It's got room to drop. Right? You got four red bars. It's breaking through this support right now. It's not on a closing basis. It looks like it can go down here. Weekly charts in an uptrend. It's coming down to support. Same intraday time frames. right? Factory work. Look at everything the same way. That doesn't mean they all look the same. The analysis is the same. Right? Dow, come up to resistance, topping tail, little peak above the highs, wide range bar breaking down, clearing this. Talked about the head and shoulders top in the letters over the weekend. And I'm not, whatever. This is kind of like another type of measured move. Take that. Right? This is the idea behind head and shoulders tops. You take from the head to the whatever, and you project it down there. And some would say, well, is it the top of the head or is it the bottom of that? And then duplicate that and put it down here as a projection, which puts it down to the 200 in this area down there. So the 200 seems like a likely place because it's widely followed. And you look over to the left and there's bottoming tail bars there. That's typically the way these measured move type of things set up, where they focus into those areas to the left of price support. And when we look at the Dow, so the media is going to be looking at the cash, the Dow, that's what's reported. And we go and look, same scenario there. You'll probably see them all come out and, give this kind of analysis maybe by the end of the day, or where will be the people that are putting their fingers on the diagonal line saying, oh, look, it broke the trend line. And then when that doesn't work, they'll put their finger somewhere else. All right. Put that there. Over to the left, bottoming tail bar, same story. And we could say, well, how far down is that from high to low, if that's going to be the correction? All right. The correction low, we're talking close to 10%. Really not a big deal as long as it stops down there. So we shall see. And Russell getting clobbered a little there this morning, but actually showing a little relative strength, right? It's not clearing this low, but it was showing weakness originally. So we'll see. I'm interested to see what happens here. And this may be the one to go to for an intraday trade when these markets reach a low. And that gets down here to this swing low right there. That maybe it begins to turn around. Now, maybe a momentary bounce. And we'll see where this week ends. And it's just the beginning of the week. But if it looks like this at the end of the week or worse, that's going to suggest even lower. Bonds are up, of course. Just because they're up, that doesn't mean they're turning a trend around or up above resistance, which they're not. It's just trading inside of this range. As I said, you look at a minder, that's a starting point. Then you look at the actual chart. Crude oil looks like it's beginning to turn lower. Right? We talked last week about this being a dangerous pattern to be thinking to short. It seems so obvious that it should keep going down because of the power that it had on the move down. But that is the power of the void right here. I'm going to say, well, what is a void? Well, a void is where there's little to nothing to stop something from going in the other direction when you get this kind of a momentum move like that. And so when you don't have anything, well, then there's the possibility, especially where so many have sold something and sold short, for prices to reverse back up. Now it's reached resistance over to the left, these overlapping opens and closes. And it's obvious that this is where sellers would want to step up. Gold getting beaten down today. It looked like it was ready to pop if it got above this high. That's not going to happen. Not today. Looks like it's got to go back down to the bottom of the trading range. Overall, just consolidating its gain. And silver, right, down to the bottom of its little trading range. I'm being asked about internals here, which we're waiting for them to reach bullish levels. Right. Last week, I spoke about when the McClellan, the breadth internal, gets up to zero in a bear market, that's where you look for prices to go lower. And it just worked out perfectly. And it just come up here, Things stalled, down it goes. Sentiment is just starting to come down from being way extreme. So, as this correction unfolds, what we'll be looking for is these internals to line up. I don't know where it'll come, but anywhere down here, together, and then maybe that's down here, and we start looking for things to turn around for the Christmas rally. Now, I'll just mention, I don't know where this is going to go, where it'll end, but if we look, we have information. From the past. We don't know what the future is, but what I do know is if this market internal breadth indicator comes down under minus 300 every time, within a couple of days, the market will bounce. So keep it in mind. We'll see where this goes, how far this unfolds, and what we always do, we use past information to guide us to what is in the moment, whether that's market internals, multiple time frame analysis, candlestick patterns, trends, relative strength and weakness. That's what we do. All yours, Dan.
All right, good morning. I'm just setting a note there to hold off on new shorts. We actually had more shorts than longs in our weekend letter, and Gap's gonna mess it up. Charlie India, Whiskey Yankee, on and on. But I'll go through them all in the first half hour. All right, so yeah, 30-minute low on any gaps. That's just our standard rule. Maybe I'll go through them. I'll focus on our opens, and maybe we need to not get out earlier than a 30-minute low if we're thinking the market's going to continue lower. But that's our vanilla tactic, just to give us a little bit of breathing room. So unless you have a specific question, I'll go right to gappers. Nicola, we actually do have a put spread. So this is a nasty gap. The CEO, the breakout was when GM took an interest in them. Bearish retracement, and right at that bullish engulfing, we sold, or maybe it was 2 days later on the retest there, sold an out of the money put spread, the 25s, and it's gapping right there. So I'll watch it. We'll see. 30-minute low for now. But even with this nasty gap down, we're nowhere near our max loss, because there's going to be huge time premium on both legs there. And somebody was asking me, typed in here, hey, what happens to your put spread if the stock gets halted? Well, nothing's going to happen to it. Then the option market halts at the same time, and it's like with any other position. And I have a video of that in resources. When can you get a sign when you're short calls or puts? It's whenever the option holder wants to make an exercise notice. But other than the one example that I talked about with Colette on Friday, where you're short an in the money call option, and they have a dividend payment where they don't mind forfeiting the few pennies of extrinsic value, you would be an idiot to do an early assignment, because then you'd be giving up your extrinsic value. All right, ILMN, nasty gap here, selling off more pre-market, but that was quite an upside shakeout. Wow, I can't even see it on this chart. Gapping at 256. That might be worth watching. That's pretty big sell-off in less than a week. I'm going to put that in a window. ILMN. Let's see, Whiskey Yankee I mentioned. This was one of our trades. Beautiful, just breakdown. Whiskey Yankee, Rawlings after upside breakouts. and the gaps are gonna mess them up probably. Cub, something got it rocking pre-market here. It's 51, way the heck up here. That's very bullish. Tesla, you know, anything up in a weak market is strong. And Tesla, they have their battery day tomorrow, so I don't know, the marketing people are milking that. A couple things mentioned favorably in Barron's. Of course, Possum, if it sets up, sure. I love day trading VXX, love it. But you know the drill. I need a pattern, and I'm going to take my signal off. I need a bearish spiders. So so maybe a 30-minute low, if it can't open, if it can't bounce. So sure, I love VXX. FT, Rengen, yeah, after the open, it's 10 a.m. FT traders, X-rays or intrinsic dividend by short. It's when the dividend is going to be bigger than the extrinsic value that you're giving up by an early exercise. So on that spiders one, I don't know what the dividend was. Let's just say it was $1. Then if there was only a nickel of time premium left, you need to own the spiders to get paid the dividend, right? So you have to make an exercise notice, so you're long. And if you just keep things simple, then you'll learn it once, and you're like, yeah, of course, that's common sense. For saying, all right. Yeah, I did notice that it was positive though. That I think it's probably positive because of the battery, Tesla situation, but it's sure been a beast. All right, GPM was mentioned, Barron's. The cover of Barron's was, hey, what are we going to do when we go cashless society? So it talked about these 6 stocks here. So FISP, I see no pattern. I talked about MA, Visa, PayPal. I have no pattern on either one of them, so nothing to do there, but I still like looking at them. Olin here, I posted an alert saying that we'll watch it. Look, beautiful head and shoulders. Look, there's your shoulder. There's your head. Wide range breakout, 1, 2, 3. Hey, Greg, I checked all the 1, 2, 3s. I'm shocked this one wasn't in there. I didn't catch that scanning, but beautiful. Gapping up in a weak market. So that's, I have it here in the bottom right. William, Qualcomm, sure. Yeah, you know, just when the market is gapping so big, even for shorts, we want to make sure that we still have a bearish bias. But yeah, you can put that on the list. Knock for, I don't like shorting stocks under $5. And also, Alex, there's a difference since this one from here to here fell so much. I like the Whiskey Yankee and Rawlings much better because they're closer to resistance, with the MAs just starting to roll. Lily, somebody emailed me, Colette or somebody, saying, hey, breakdown failure, relative strength, bottoming, daily, weekly. And I said, yeah, absolutely. Yeah, let's keep an eye on Lily. Airlines. Oh, and I got another email this morning saying, oh, Dan, is this market petering out because of the Ginsburg, of the fight over the Supreme Court nomination before election. And I said a little, maybe, I don't know. But I said, when I looked at futures last night, when they opened up at 6, and whatever time I stopped looking at them, they were up like 4 or 5 points. So we knew about Ginsburg on Friday. So no, the market's not down 600 points because of Ginsburg. And then, finally I started hearing more and more. We got the banking problem. A lot of banks, I guess, are being reported of moving around illegal money, which that was no surprise to me, And then Corona's back in focus. Yeah, Corona's going to be in focus for a while. So all the travel stocks are getting beat up. Airlines, cruise ships, the same junk bottoming things. Do you remember when China, every other day, China was in the news, tariffs, and that's what the market was focused on. So this Corona is not going to go away on any given day. And then the media obviously has a big factor of putting it in people's face to create fear. Roku, 30-minute high is not bad, Mark. Yeah, I like the gap. It's a buy setup. If it can reverse here, I like it. Sure. Yeah, I'll put it in a window. All right, let me just continue here. ACI gapping up in a weak market. Bottoming pattern, well, not really a bottoming pattern. It's in a downtrend and it's an IPO, but I like the gap today. Over today's high, that's worth watching. Let me put him in this spot. Yeah, I mean, everything's, well, not everything. Our INFI is actually green. It is that's a bearish gap. I mean, gapping under all of these 8 soldiers. Yes, it's a big gap, but it actually looks lower to me. That's a nasty gap with a price void. But I personally would not be doing anything until I get some more information in the next 5-10 minutes. Wow, tick, I show negative almost 1300. Wow. So looking at my 15-minute charts, anything that's green's relative strength. Roku, as Mark said, is near the top of the list on my usual